Right. Hi guys, welcome to a brief introduction to what is a trend. My name is John Docherty and I'm the founder member of the Forex Fire Members group on Facebook. And if you enjoy or find this information useful and what I'm providing here, if you please go ahead, like, comment or share, or if you want to know more about what I do, get in touch with me. So basically this presentation is all about Forex and what is a trend. So on slide one, basically, what is a trend? A trend's on the buy side where you get in a good place to get in is at the bottom of the trending line. The buy price should rise and you buy low and sell high. And then it's the opposite on the sell end. You get in at the high end, so the sell price starts to fall, so you get in high and then you sell low. Okay, so the uptrend is basically you make higher highs and then higher lows. So you start off from the bottom here, you make that high, then you go low, then you make the higher high, and then you come back down to retrace to make a higher low, up to a higher high, back down to a higher low, and so on. So you're looking for the long-term buys and short-term sells. So what I mean by that is basically the short-term sells is back on the retracement onto the low, and then you're looking to buy here to go back up to the high, and then going to the the higher low, sorry. Right. So we go on to the next one. So here's a good example of what an upward trend would look like. So basically, this is constantly making higher highs and higher lows, and as it's going up on the cycle here, it's going back and retracing back, making that higher low, and then it's continuing up, making another higher low, and then another higher low, and then another higher low. This takes us down to the downtrend. So it's a complete opposite of the one we just described there. So what you're looking at on the downtrend, again, it creates a bit of a channel, a bit like what the uptrend did, but in the opposite direction. So the downtrend, it's basically coming on the high, then you're going down to the low, making a lower high, and then back down to a lower low, up to the lower high, back down to the lower low. So in essence, you're looking for the short-term or the long-term sell and the short-term buys. So as you're getting the retracement back up to a lower high, you're getting in at these points on the sell, and then it's making a lower low, and so on. So the downtrend in the market would look a little bit like this. So basically on the higher time frames, this is a good idea of what you'd be looking at as it's making the downtrend. Where the arrow is here, this would be a good place to get in at, because you're at the high point, and then it's making the higher lows on the way down. Yep. So the ranging markets, basically, the ranging market, this is where it's best not, where it's not trending. You see the market's moving sideways. It's going up and down, up and down, up and down. It's not really moving in any direction or giving any sort of momentum. So this is going sideways. So there's words for this. It's called the sideways movement, consolidation, or it's also known as indecision in the market. Make sure you take note of these three terms because they get used a lot within the Forex trading industry. And keep away from trading from these, because you just end up being in an emotional trading state and it could cost you a lot of money. So what's consolidation? So consolidation is where the market's moving down. As you can see, we've got a downward trend, and then you start getting a sideways movement. Again, this is the indecision, ranging sideways, and then we're moving back down into the downward trend with a little bit of uptrend. Again, consolidation where it's moving sideways, and it's the indecision of the markets, and then we go back into the uptrend and then back into the indecision. It's the consolidation. It's in the market. It's indecisive. It confuses you, and it can end up taking a lot of your money. Okay. So the indecisive market, again, it's best to wait for the price to break this sort of pattern out of this chop before making any trades. Yeah. Be prepared to lose a lot of money when you think you're in a buy and then it goes into a sell. You get emotional, you go into the sell, and then it goes back into a buy. So when it's choppy markets like this, just stay away from it, to be fair. So this takes us on to why I call that this is the trend is your friend. In our group, in the Ninja group, we use a lot of tools. One of them is called the Web Analyzer, and there's one of our good friends in there has devised a strategy where you use the trend. This is the basis on why I'm describing this sort of basic presentation. Trend Your Friend is a lad called Rob Hunt in our group. He uses a tool on the Web Analyzer where it gives you trade ideas. From there, you use the trend line, and when it breaks this trend line, you know basically when to get into the buy or when to get into the sell. Again, using a couple of other signal indicators. If that's something you want to know a bit more about as well, just leave a comment below or reach out to me and I'll put you into the group with regards to learning a bit more about that side of the Forex business. Right. So a downward trend. As you can see in here, this is a downward trend in the markets. So you see the higher highs, the lower highs, I should say, you'll get in where the arrow is pointing, basically. And then as it's moving down and it's retracing, you're not going to be losing any money on here because this market's in a big downward trend. So anyway, ended on the retracement will be a good entry point. That's why the trending market's always best, because it cuts your risk in losing any sort of money. Okay. And that's it, guys. So if you've enjoyed that short presentation on what is a trend, again, hit the like button, hit the share button, and comment below, and I'll get back to you and we can have a further chat on just how you can make that little bit of side income learning the world of Forex. Thank you.